Hi, I'm Sarah Lacy, and welcome to Ask a VC. We're finally back after the holidays, and my guest today is Jason Green of Emergence Capital. Now, Jason, just in one sentence or two, describe what your firm does and why you guys are unique in Silicon Valley.
Sure. So I was a co-founder of Emergence back in 2003 with two partners, Gordon Ritter and Brian Jacobs. What's unique about Emergence is really we have a very focused strategy as a VC firm. It's a lot of fun being an entrepreneur in the venture business. In a lot of ways, we got to start with a clean sheet of paper, learn the lessons, having been in the business over a decade of what worked and what didn't. And we had the fortunate benefit of starting from scratch and focusing in a category we thought was going to become much more important, which we call technology-enabled services. It's really we call the business cloud opportunity. Back in 2003, we got lucky early on, invested in Salesforce.com, another company, SuccessFactors, early on. And we now have about 25 companies in the portfolio focused exclusively on this B2B opportunity, which we think is huge and growing.
Yeah, I think we're going to have a big year of it this year. Let's get to some reader questions. All right, one man who asked to remain nameless, maybe he's an enemy of yours, wanted to know, what are the main aspects in Europe that in your opinion make the cloud products better than traditional on-premise solutions? Isn't cloud just another delivery mechanism, or as Larry Ellison puts it, another fashionable word for computers attached to a network with the only fundamental difference is that the business model is rental? What are your thoughts on that?
Well, I think that's was a kind of classic way that the incumbent vendors characterize these new companies, and I think the evidence is really in the success of these companies, really disrupting these markets. I mean, Siebel, for instance, I think was the leading CRM vendor, owned the majority of the market at the time, and Salesforce, I think, they reference it as the wiffle bat of CRM systems, and now, it's a multi-billion-dollar opportunity here. So. I think what's different about it is it's really focused on end users and delivering business value versus selling from the top down, and that's a very different mentality. One of our companies recently hired somebody from a gaming company. I don't know a lot of enterprise software companies that would have a product development person from a gaming company join them. It's just that's the difference in the mentality and the culture of these companies.
But to be fair, I mean, you bring up Salesforce, and that's sort of like someone bringing up Facebook as an example for Web 2.0. I mean, it's clearly an outlier. There were thousands of software as a service companies started, and very few have done what you described with Salesforce.
Well, I think that's fair. But if you actually compared the success rate of software service companies to consumer internet companies, I'd argue that the success rate is much, much higher for SaaS companies. We have in our portfolio two companies that have gone public in the last 5 or 6 years, Salesforce and SuccessFactors, and our multi-billion-dollar outcomes. We have probably another dozen companies in the portfolio that I believe in a couple of years you're going to hear a lot more about, and our future Salesforce.coms. It's taken a long time to build these companies. I mean, they aren't, frankly, like a Facebook or a Groupon where they can just emerge from nowhere in 2 or 3 years and dominate. It does take 5, 6, 7 years to build companies of substance, but that's okay. We have 10-year funds and a long-term perspective, and we're happy to be patient and build successful businesses over time.
Okay, a couple more questions that get to some of those challenges. Scott wants to know, if the cloud is the future, then why are companies like Oracle, SAP, and IBM doing so well?
Well, I think, first of all, IT is a huge, huge business. I mean, there's over $1 trillion a year spent in IT. And today, the cloud or, software as service is still a small percentage of that, but growing. So I think those companies have been acquiring other incumbent vendors, traditional business model vendors, and kind of consolidating the market. I think that's where most of the growth has come from. Whereas if you look at true organic growth, the incumbent vendors are not growing that dramatically. They're basically, aggregating a bunch of maintenance revenues and license revenues from existing companies and pushing more product through existing customer bases. I think what's intriguing about SaaS and the cloud is not only are we disrupting some of those incumbent vendors with their core customer base, but we're opening up whole new markets. And when I mean whole new markets, small or medium-sized companies can now have functionality that only Fortune 500 companies could have a decade ago. And we now are global for the first time. Companies around the world can use these products as easily as a company here in Silicon Valley. And so those two things weren't true before this cloud delivery model.
Okay, Scott asks as a follow-up, when, if ever, will we see a billion-dollar revenue enterprise without a server in the back room?
Wow, that's a good question. I don't think it's as far away as you think.
Really? You
Yeah,
don't think one server in the back room. You actually think everything is going to be in the cloud in the not too distant future.
we have companies that are already at the kind of 20-30 million dollar run rate with no servers.
Wow. Well, good for your companies, because that would give me the willies if I was a billion-dollar enterprise.
Well, again, I mean, these companies are built on top of other very substantial cloud platforms. And so they're built on top of billion-dollar revenue businesses. And so without that, it would be scary.
All right, Alan asks a question I'm really interested in hearing the answer to. How do you think sales and marketing are evolving, and where do they need to go? Everyone is so jazzed about reducing 80% of OpEx not related to developing the software. What does sales and marketing look like in the new enterprise? I feel like one of the big myths in the early wave of software as a service was that these things would sell themselves, and you didn't need traditional, elephant hunter, software sales guys. And almost every company that I've talked to has said that was what really caught them by surprise, that you do have to still build out that expensive sales and marketing operation. Where do you fall down on that? And how does it need to change, to Alan's question?
Well, first of all, it did change pretty dramatically between the traditional enterprise software companies and SaaS businesses. While you did have to continue to hire salespeople, you could sell much more expensive products over the phone than even traditional vendors were selling with field sales reps. So I think that did change the economics of sales and marketing fundamentally. What's really interesting, though, is really in the last couple of years, we've seen a new wave of companies emerge with what I'd call the business freemium model, which I think has some intriguing aspects to it, where you can basically get people to test the product, get value out of the product, and you're essentially upselling an existing happy customer versus trying to convince them to try something. And that, if you can get conversion rates in the 5, 10, 15% range, can create some pretty monstrous companies in a reasonably short period of time. And the second thing is many of these products have some inherently viral characteristics associated with them, not all of them. But if they do, that even adds fuel to the fire, so to speak. And companies like Yammer or YouSendIt or EchoSign in our portfolio, every time somebody uses the product, it actually educates other users of the potential of that product. And that has some really intriguing efficiencies from a sales and marketing perspective.
I'm curious about a company like Yammer that, is more built out of the consumer internet DNA than, say, a company like, obviously, what Salesforce.com is doing with Chatter, or a company like Jive, which has all these old Mercury Interactive hardcore sales guys in it. I was talking to a VC yesterday in the space who said that, Jive is doing a lot better in the market in terms of making big sales than Yammer, even though Yammer has a better product because it has people who know how to sell software. Is that something that these companies just have to invest in? Do you think the best product can win?
Well, first of all, I do think from an adoption perspective, it's clear that Yammer is the market leader by probably 2 orders of magnitude. There are over 100,000 companies have adopted the product, and 80%, I think, of the Fortune 500 have Yammer networks up and running. Now, those are not all paid customers, but we are converting a very high percentage of those companies to paid customers. And over time, I think as we go into bigger and bigger companies, we're going to have more of an account management and relationship with these folks. But what's fascinating to date is we've done it so far with very, very few sales reps, and they're all in-house. And there's some big deals that are going down. I think 5 or 6 Fortune 500 companies were closed in just Q4.
And having owed a lot of your early firm success to Salesforce and now investing in Yammer, how do you see Chatter versus Yammer? Do you think Benioff has the chops to really compete in this area?
Well, first of all, we're huge fans of Salesforce. It's a wonderful company, and our firm and our industry has a lot to credit Salesforce with really educating the market on the opportunities. We have several companies, by the way, that have been built on top of Force.com that are quite successful. And so we're huge fans of the company. Chatter is a great product. I think traditionally Salesforce has done a great job of innovating in new areas. But their core business is CRM, the Service Cloud, and their platform. Those are some pretty big opportunities that they're executing on. I think it's always hard to execute world-class in multiple areas. But I wouldn't put it past Mark Benioff to be very successful in anything he puts his mind to. That being said, Yammer is very focused on the category. I do think they have a slightly different DNA, as you pointed out earlier, coming more from the consumer internet side. And to be the business social network, I think actually that kind of DNA plays very well to Yammer's strengths. And I think right now they're the company to beat. I think Chatter will be successful, within Salesforce customer base and in the sales and marketing area. It's several of our companies use it, but for Yammer, I go overseas internationally and talk to companies, and they're using Yammer. It's really become a phenomenon, and I think it's going to be very tough to catch up.
Okay, great. Speaking of other countries, Patrick wants to know how startups can convince companies to host their data in the cloud, not just in the U.S., but in many countries where companies view relinquishing control of that data as a sure way of opening the doors to blackmail or corruption. Have you seen any issues like that in other countries being more scared about putting data and information up in the cloud?
Well, certainly the U.S. has become an early adopter of many of the cloud platforms. But what is interesting is, many of the companies that have adopted the cloud are global companies and have employees all over the world. I think, SuccessFactors is another one of our investments, and a fabulous company, I think, is selling in 100 countries now. Most of their customers are global customers, and, they haven't really had an issue, frankly, with that. Europe, I know, has some pretty strict, privacy and security controls. But the companies who are world-class at this, who are SAS 70 compliant and have all the audit and security capabilities, are selling very, very effectively in Europe, in Asia, and, even smaller companies, frankly. We have a company called ServiceMax that's built on the cloud, and, they're selling into, countries like Korea and Vietnam. I mean, it's amazing.
And what about funding companies coming out of those areas? A couple questions, one from Sumit. Wants to know about how you would assess the riskiness of a venture in this space from a country like India. I think we get an Indian writing in a variation of that every week. They are the most aggressive people at going after VCs, if they're at least the ones who read TechCrunch. And Mark asks similarly, now that tech teams, sales teams, management, and customers can all be on separate continents, when will Silicon Valley VCs start looking beyond the Bay Area?
I think, well, first of all, for early stage investing, I don't think that's going to change for a long time. I mean, it's just the dynamics of the business. If you like to be active with your companies, you like to be a close by, and so you can spend time with them. That being said, I don't know a single company in our portfolio that doesn't have some kind of international development or partnership or customer base. So companies are global from day one, effectively. We have looked at some companies recently that are taking the software as service model and applying them into countries like India, like China, in the UK. But to be frank, I don't think any billion-dollar SaaS businesses have been built outside of, frankly, Silicon Valley.
Right. And frankly, not that many within Silicon Valley, to be honest. I mean, as you say, it's, in the grand scheme of things, not a very long trend, and it's one that takes a while to really build a big business.
Yeah, if you think about it, Sarah, I mean, for the first 10 years, we've taken probably 5% of the market as in the cloud, but those are the early adopters, right? In the next 10 years, we could very quickly go from that early adopter to the mainstream and see, another 50% of the market come over. So I think the next 10 years are going to be 10 times as exciting as the last 10, and I think you'll see many, many multi-billion-dollar companies come out of it because of that.
All right, last question. This is also from Sumit, our friend from India. He wants to know what sort of consolidation trends you expect to see in 2011. Already in this young year, we've seen a couple examples of, early innovative companies being snapped up. Do you think that's going to continue? Any big deals happening?
Well, what's interesting is, first of all, the cash hoards of technology companies are at an all-time high. And some of them are experiencing some growth issues, at least the large incumbent vendors. So I think they are going to get much more aggressive in terms of M&A. Also, what's interesting is some of the new startups, Salesforce included, have become large enough now where they can make very successful and significant acquisitions. So I do think we're going to see some more M&A and consolidation occurring. But also, one of the, frankly, benefits of having a market that's been as volatile as it's been is you have time to build these companies. And so I think over the last 5 or 6 years, under the covers, there's been dozens and dozens of very, very successful businesses being built. When the market comes back and finally recognizes how much innovation has occurred in the last decade, there's going to be a wave, I think, in 2011, 2012 of some pretty significant IPOs and M&A outcomes.
Well, I'm sure your LPs are hoping so. Thank you so much for joining us, Jason.
Sarah, thanks so much.